Well, joining us now live with all the latest on what is moving commodity markets is none other than Pete McGuire from NG Farah. And Pete, a very good morning to you. Now, this gold price dilemma to a certain degree, let's not forget there is a strong underpinning of the demand coming from that Indian festive season right now. I guess it all comes down, though, to this election, and needless to say, before that we have US non-farm payrolls.
Well, exactly. Good morning, Maura, and good morning, Carson. You know, another thing we need to think of, the Democrats, we saw a huge rally, a magnificent rally in 80 and, of course, 1980 and 2011, Maura, when Jimmy Carter was in power and, of course, Obama. Now, when you put your mind back, if Romney does get in, and this is what the pundits are saying, you will see probably a change in sentiment, certainly. Bernanke's term will come to an end probably January of 14, and more hawkish Fed Reserve governor would be placed in that position, and we would see probably more strengthening of the US dollar, and you're going to see possibly a further weakening of gold. That's that side of it. If Obama comes into power, then I think you're probably looking at 1850, a quick march up to that by year end, or certainly by January 13.
Okay.
Interesting enough, non-farm payrolls come in between all of that.
Yes, they do.
One view, at least from Frank McGuire at Integrated Brokerage Services, saying that if you get a good unemployment report, that's bad for gold. Is that generally the consensus?
Well, I think so. It doesn't do it any good, Carson. And also, I think it's not going to do Obama the last probably 72 to 96 hours of as far as the election's concerned. It's going to feed into that. But certainly, no, it doesn't do gold any good. And it just shows the weakness, I assume, of the US economy. The other side, of course, is that we weren't expecting Hurricane Sandy and what impact that could have to the elections. We've seen the markets really no action. And of course, the commodity sector has been very, very slow over the last couple of days.
Because you saw all that rushing to buy in the supermarkets to obviously hoard.
Yes.
For the unknown. You didn't see that at the Bowser. People were kind of being a little bit more circumspect. Well, did that surprise you?
Yes, as far as demand is concerned, there was no great increase in demand, probably more an increase in natural gas, but certainly gasoline, and those prices have come off very heavily in the last week and a half to 2 weeks. So the consumer over there, the talk of being $4 a gallon, now it's under $3 a gallon. So they're satisfied as far as that's concerned, which could play very well into Obama's hand. People have short memories, Maura.
Yeah.
The US aside, the other world driver, of course, China, a focus there. We've got the official PMI data coming out tomorrow. Analysts calling for a 50.2 read. Now, this would be a good sign because we've seen contraction in that manufacturing space for so long now. Certainly that would really underpin what many are saying is a stabilisation, if not the bottoming of China's market and economy. I mean, if we see this 50.2, are we likely to see a bit of a global knock-on effect in terms of commitment and spend from other countries into their own economies?
You could see a little bit of a rally on the Shanghai Composite. I wouldn't be surprised of that. Remembering that, you know, if anything, but 50 is, you know, anything under 50 is contraction and anything over 50 is expansion. But, you know, 50.2 is nothing to, you know, yell from the rooftops. It's a little bit better than what we saw in September, more at 49.7.
People are starting to yell a little bit, though. People are getting a little bit carried away. Is this just unprecedented excitement and hope coming in? I guess, highly sought after confidence returning? Or?
Well, I think it is. Look, they've had better GDP figures, and as far as that quarterly growth, they're saying it was a little bit better as far as September quarter. So that's a good sign for the Chinese economy. Though it's still got to, we all understand, as far as export-driven economy, it needs to hit some better numbers. But the PMI is always a good sign of that, Maura. So hopefully we're going to see a little bit of a resurgence.
Manufacturing aside, or at least speaking of the effect that the manufacturing may have to at least the domestic economy and the strategy and policy that they put internally. One thing we don't talk about a lot here on the program is soft commodities, certainly rice, wheat, corn, the likes there. We have certainly seen a pickup in the last couple of months, rice in particular, wheat, a sharp spike. We do have some charts that we can bring up in terms of consumption. So certainly that middle class that we heard Mr. Packer speaking of earlier, everybody's pinning their hopes, it seems, on this burgeoning middle class in China. Just talk us through some of these and your analysis of it.
Okay, well, that graph, Moira, shows us from 2006 to 2011, and they're the ones down at the bottom, bundled down the bottom. And then you see 2012 was the red dotted line, which is it's just out of the park as far as buying. Now, China is the largest consumer, and it's also the second largest. It's the largest grower, and it's now the second largest importer. Now, going back to 2010, 2011, it was the 7th largest importer in the world. So it's picked up its consumption dramatically, and we're seeing that across really all of the other agricultural sector as far as Chinese imports for food. We saw that in wheat as well.
Can we not see an increase in the domestic production of these soft commodities? Is there simply not an opportunity there for their economy to rely a little bit more on the agricultural sector to drive overall growth as opposed to turning to importing?
Well, yes, there's certainly very much, but the troubling thought is that what we saw is those rice riots going back in 2009 and 2010, are we going to see a return of that as far as Thailand and other nations that can't, have to be large importers, and what effect that has to really a staple that better part of 55% of the world's population consumes daily or numerous times per day.
We're on a roll with those charts. Let's have a look at another one, because so far that red dotted line seems to be all over the shop. I mean, what on earth? That looks like a 2-year-old's.
Yes, it does a little bit.
Kindergarten.
I say 3, Carl.
Result. Lovely, we'll put it on the fridge, but what does that actually tell you?
Well, it just shows us that if you look at that, the imports and the red dotted line, and I agree with you, it is all over the shop, but you certainly see the red dotted line has been dramatic as far as Jan, Feb and March and April of this year as far as those imports. Now, they're the largest we've seen in the best part of 6 years, and that's pretty much what it tells you, but it's certainly tailed off as far as barley over the last 7 or 8 months.
If you had warrants on that, you would be losing your hair.
Oh, it depends if you were long or short.
Yes.
If you were short, you'd probably be doing very well if you're buying some put options or you're writing some calls. But if you were long, it might be a bit of a problem.
Yes, indeed. Pete, we'll see you next week. And
Thank you,
that will
Carson.
be post-election.
Yes, it should be very interesting.
Look forward to it.
Who are you tipping?
Never say never, but it seems as if the economy is picking up. It seems as if Obama might just get over the line.
Moira?
Yeah, I don't want to bring forbidden dinner party discussion onto the table here, but
Add all colours to the mark.
I have to say I would be putting my money there. And all right, we'll put a wager on it after, and we'll talk next week about it for sure.